Alright guys, welcome back to my channel. Let's take some sales. Today's video I'm going to teach you how to use zones to scalp. This is the 8 hours time frame on volatility 100, and you can see what the market is doing at this zone. See the tiny zone there. How do you know a zone? You can see from the left where we have this rejection from here. This place the market is rejected here as if it was a resistance zone. So I'm going to extend this box all the way to this. I'll extend it all the way to this, to the right side. You can see the market finally broke above, and then it found it hard to break below. It tested like 3 times, and remember this is the 8 hours time frame, and the higher the time frame, the higher the zone you find in a higher time frame, that's the higher the time frame, the stronger any zone you see, even if it's a trend line. So the market broke below. I think it's closed below the zone, depending on how you draw your zone, because it can actually be a big zone. So, but for now, I believe the market has not closed below the zone until this candle that is forming closes. This is it's remaining 4 hours. So, but I know that there is a zone there, and for now, let's just assume that the market is trying to retest the zone from the downside. That means the market has broken and closed below, because if you judge with the zone that I drew, it means that the market has closed below this zone. So with that in mind, we are expecting sales, right? That means I have to go down to smaller time frames. Remember, we usually do the top down analysis. So from H4, keep looking at it. It's getting clearer now. You can see this. See all the times the market tested, broke below, and closed according to our zone. Keep going down H1, the H1. Now on the H1 time frame, you can see how many times the market retested, then broke below. That means the market actually closed. Looking from, as in, if you are looking from the 1 hour time frame, the market actually closed below, and then it's trying to retest the zone. So we're gonna head straight to 15 minutes time frame to confirm. So from 15 minutes time frame, we can actually put up our trend line. So this is a counter trend line. As long as the market stays above this trend line, we might not enter a sell, but I'm not done with the trend line. So because we have to go down to 5 minutes, and we still get another trend line, a steeper one. So always use the wicks of the trend line. Use the wick. So we go down to 1 minute, and that's the place we're going to take ourselves from. All right. Now you can see a reversal pattern here. So whenever you're expecting the market to reverse from a zone or a trend line, most times it will give you a reversal pattern. And in this case, the market gave us the head and shoulders pattern, right? And what are we waiting for? We're waiting for the market to break. Normally, I'm supposed to enter the trade now, but I need an extra confirmation. The market needs to break this the neckline, and then it needs to give us a retest. So if the market can just break below and then maybe retest, then we take a sell entry from there to the downside. Now the market has broken below. You can actually hold your trade from that place all the way to this trend line. So you use the trend line as your take profit, because once the market gets to this trend line, it must react. And as I told you guys, the higher the time frame, the stronger any zone you see or any trend line. So remember, the market must close below the zone. It only gave us week. I don't like this week. I'm not going to take any trade until I see a body. The market must close with a body, and this is 1 minute time frame. So the stronger the zone, the more you are supposed to respect the trend line or the zone. As in, the higher the time frame, the stronger the zone or the stronger the trend line. So this big trend line here is, I think, from 5 minutes or 15 minutes. Yeah, 15 minutes. 15 minutes time frame. So if the market gets to that place, it must react. So we wait for the market to close below, then we enter a sell trade. This is the neckline of this head and shoulders pattern. You can see it's a head and shoulders pattern. This is the left shoulder, the head, and the right shoulder. You wait for the neckline to break. The normal way to take a setup when you see one, especially if the confirmation is from head and shoulders, is to measure the length from the neckline all the way to the top. So if I can put this across, you can see this is the height of the from the neck to the head. So if you bring this down, this should be your take profit. But what determines how long you stay in the market is the time frame you see your setup. So if I see this setup from H1, I mean H4 or H1, as it's a higher time frame, I will stay longer. But where did we get this setup from? Was it from the 4 hours? Let's zoom in again. Well, the zone is actually from 4 hours, the way I'm saying it. Though we started from H, the 8 hours time frame. But I believe this zone is from 4 hours. But this is not, the setup is not from 4 hours. The zone is from 4 hours, but the setup is not. The reversal setup, that is the head and shoulders. And this is not even a stronger zone because I decided to extend it all the way to the left for extra confirmations. Don't worry, when I see a strong zone, I will make a video on that and show you how. Once you see that, no one will tell you, you know, once you see those, then you can stay longer in the market. So you see the reason I'm waiting for confirmation. Had it been we entered, immediately we got the confirmation, because if you look at this is the first place we got our confirmation from. Immediately the market broke from this trend line, I can easily take my trade from here. And then now we're in a little profit, but it's best to wait for the market to break the neckline, and then we go in, hold the trade all the way to this zone, take your profits. All we are waiting for is for the market to just close below the zone. That's all. We still have about 25 seconds for the market to close, for this candle to close. So if the candle closes below, I'll just take my sell entry without minding the retest because of the time frame is 1 minute. This is it, guys. Market closed below. So I'm just going to open two positions and then see how far the trade will go. So let me take out some of these lines. You can actually take the profit here or here. It's up to you when you see your setup. Remember I told you guys that the normal way of taking sales from head and shoulders pattern is to measure the height from the neck to the head, then take it down from the neck again, from the neckline. So if the market can get to this, the end of this arrow, that means it's actually a good take profit. So I can actually take my profit here, or I hold it. Since I opened two positions, maybe one take profit might be there, or I just monitor the trade and take it and close them manually. So guys, this is the way to go about this trading stuff. You learn how to find these zones and then be patient with the market. So guys, if you are new to my channel, please like the video and subscribe so that you won't miss more videos like this. Thanks for watching.